Okay, so you know how we do these deep dives, right?
Yeah.
We take your submissions. And today, we are taking one of yours and really going deep on it.
Mm-hmm.
This time around, we're talking about keeping your cool when things get a little heated financially. You know, like when the market's doing its roller coaster thing and all those emotions start bubbling up, fear, greed, all that jazz.
Right, because we're all human.
Exactly. So the excerpt you sent over, it's all about that, the psychology of decision making.
Yeah.
And how even our past experiences, especially those that went a little sideways, can totally shape how we approach money decisions down the road.
It's like, it's one thing to say, learn from your mistakes. Everyone says that. But how do you actually do it? How do you use those experiences to make better choices,
Especially when there's so much money on the line.
Yeah. Especially with money involved. That's where this whole idea of emotional intelligence comes into play.
Emotional intelligence, yeah, I've heard that tossed around.
It's more than just being a numbers whiz. It's about recognizing and managing your emotions, especially when making decisions.
So, like, not letting those emotions completely hijack your choices?
Right, exactly. There's a whole bunch of aspects to emotional intelligence, self-awareness, self-regulation, empathy, social skills. It's a whole thing.
Okay.
But for this deep dive, let's zero in on self-awareness. Like, how can you be more aware of your emotions in those crucial moments when,
when you're about to make a big decision.
when you're about to pull the trigger on a trade or an investment? So one way to start is to think back to a time when you made an impulsive financial move. Like, maybe you panic sold during a market dip. Oh, or maybe you jumped on a hot stock tip without,
Oh, yeah, without doing any research.
without doing your homework. Now think, what were you feeling at that moment? Anxious, greedy, maybe a little too optimistic?
I know, I have been there.
This is where journaling can be super helpful.
You mean like, Dear Diary, I just bought that meme stock because everyone on Reddit told me to.
Well, yeah, but go deeper than that. Analyze what really drove that decision. Was it FOMO? Did you let a charismatic influencer, kind of sway you? By putting it all down on paper, you start to see patterns.
Well, you start to see those same emotions popping up again and again.
Exactly. And that's how you start breaking those cycles of making the same impulsive choices over and over.
It's like you're doing a postmortem on your bad decisions. A financial autopsy.
I like that, a financial autopsy.
Yeah.
Because by understanding your past decisions, you can better anticipate how you'll react in similar situations down the road. Let's say you have a tendency to get really optimistic and you chase returns. You jump on anything that looks like it's going up.
Done that.
So knowing that about yourself, you can start building safeguards into your strategy, like setting predetermined buy and sell limits. So you are not just,
Right. So you're not letting your gut make the call when the market goes haywire.
You're not just winging it. Now, the excerpt also mentioned O-dealing and diversification, but it didn't really dig into those concepts.
Okay, yeah, those are buzzwords you hear all the time. Maybe we could break those down real quick for anyone who's not familiar.
Sure. Hodling basically means holding on to an asset for the long haul, even when the price is all over the place. Think of it like riding out a storm,
Yeah, riding out the storm and keeping your eye on the horizon.
Exactly. Now, diversification, that's all about not putting all your eggs in one basket.
Mm-hmm.
You spread your investments around into different things, different asset classes,
Like, you don't want to have all your money in just stocks. You want some in bonds, maybe real estate, that kind of thing.
Yeah, precisely. Spread the risk, cushion the blow if one area takes a hit.
So even if we're HO dealing and diversifying like pros, we still need to be mindful of those pesky emotions.
Emotions will always be there, right? And there's another sneaky one. Loss aversion. It's this psychological quirk where the pain of losing, like, say, $100.
Yeah, it hurts more than the joy of winning $100. I get that.
It hurts way more, right?
Huh.
Like, studies actually show it's twice as powerful, that sting of losing.
So then that makes you do things like hold on to those losing investments way too long. Like, you just don't want to admit defeat.
Exactly, because you're hoping it will magically turn around.
Yeah.
Or, on the flip side, you might sell winning investments too early because you're terrified of losing those gains.
So yeah, the fear of missing out on that peak, it can be tough to fight against.
So how do we outsmart our own brains when loss aversion rears its ugly head?
Give me the secret sauce.
The secret sauce is have a plan. Before you invest anything, sit down and decide, okay, what's my risk tolerance? What are my goals? And under what specific conditions will I sell? Like, literally write down your rules.
So if this happens, then I do that.
Exactly. It's like creating an if-then plan for your investments. That way, when emotions are running high, You've already made the decision with a clear head. You're less likely to get swayed by fear or panic.
I love it. So I guess the big takeaway here is that our past experiences, even the ones that made us want to bury our heads in the sand, they can be amazing teachers, but only if we're willing to really look at them through that emotional intelligence lens.
Right, and analyze what happened, why it happened, and how we felt at the time.
So we can recognize our own biases, come up with strategies to counteract those tendencies, and ultimately make smarter, more informed choices. It's not about never making mistakes. It's about making better mistakes.
It's about continuous improvement. It's about being a little better each time.
Love that. So here's a little something to chew on. Think about a financial decision you made recently. Big or small, doesn't matter. Now, how might understanding your emotions at that time, how you were feeling, how might that have led to a different choice? Maybe you would have held on to that winning stock just a little longer, or maybe you would have resisted that impulse purchase.
This is the treat yourself moment.
Exactly. So just, something to ponder as you navigate the world of investing. Always keep learning. Always keep growing. And hey, if you want to delve deeper into emotional intelligence and decision-making, we've got a ton of resources on the website. Until next time, happy investing.
See you next time.
Bye.
Bye.